Dear students, we will do a new module, Computation of Capital Gain, Part 3. So this is the last part of capital gain computation. With this, we will complete this module and the chapter also. So, first problem, in this also I will explain two problems. First problem, Mr. A acquired a plot of land on 30/6/2006, that is CIA for 122 for rupees 7,20,000. So, I remember this will come as short-term capital gain. This is long-term capital gain 2006 to 2024 and spent 28,500 on its registration. So the 7,20,000 plus 28,800 will be the cost of the property. This plot was sold for rupees 23 lakhs on 36/24 CII 363. He had purchased a house for 4 lakhs for his own residence on 1/8/24. So construction, we have to see that 1 year before sale, 2 years after sale, or 3 years for construction. So it's coming. He sold it. He sold the property on June, and he purchased another house property in August 1st. On August 1st, so he's eligible for that exemption. He had paid 5,000 as ground rent for the property held by him. This is not allowed as an exemption. Compute the taxable capital gain of Mr. A for the assessment year 25/26. So sale consideration 23 lakhs. Expenses on sale is not there. 23 lakhs. So this is the net sale consideration. Index cost I told you 7,20,000 plus the registration charges. So 7,48,500 into 363 divided by 2006 122. That is the index. So the value is 22 lakhs 27,094. So long-term capital gain is LTCG value is long-term capital gain 72,906. Now less exemption under section 54F. 54F, he has invested in another house property within that time. So here he has LTCG 72,906 into amount invested in the new house property 4 lakhs divided by net sale consideration, that is 23 lakhs. So the value is 12,679. He is getting less exemption because he has invested only 4 lakhs. So here taxable capital gain is 60,227. So this is the first problem. Now one more problem. Mr. K had purchased two plots of land. One on 1/3/2003 for rupees 24,800 and another on 1/3/24. See 1/3/24, whatever he purchased as the second plot is short-term capital gain, fully taxable. Only for the first plot exemption will be there. So the second plot he purchased for 22,300. He sold the plot purchased on 1/3/2003. That is the first plot for 2,10,000. And the second plot purchased on 1/3/2004 for 80,000. On 1/4/2024. He had also sold his jewelry for 2,40,000 on the same day, that is 1/4/24. Which he had purchased for 52,000 on 1/8/2004. He had invested the full value of consideration from both the capital assets to purchase a new house property. Compute the taxable capital gain of Mr. K for the assessment year 25/26, assuming that he did not have any other residential house on the day of sale of the plot and jewelry. CII for 2002-3, 2004-5, 2017-18 and 24/25 are 105, 113, 272 and 363. So here three computations. One is first plot, second plot and third is jewelry, and his investment in new residential house property where he can claim exemption under section 54F. So second house property we will do the LTCG. He sold it for 80,000. 80,000. Now no indexing since it's short term. Cost of purchase 22,300. 22,300. So short term capital gain, the value is 57,700. 57,700. Now sale consideration of the first plot. First plot is 2,10,000. 2,10,000 And index cost of acquisition 24,800 into 363 divided by 105. 105. So the value is 85,737. 737. So this is long-term capital gain. Long-term capital gain value is 1,24,000. 1,24,263. 263. Now next one, he has jewelry. Jewelry, third one, jewelry 2,40,000 he sold. 2,40,000. 2,40,000. Now index cost of acquisition 52,000. 52,000 into 363 divided by 113. So the value is 1,67. 1,67,044. So long term capital gain is 72,956. Now you have to remember, long term capital gain, he has invested in new house property, that is for the first plot and the jewelry. So he has invested the entire amount of sale consideration in the purchase of new house property. So the taxable capital gain for both these cases will be nil, and taxable short term capital gain will be taxable. This is what I wanted to explain in this module. Happy learning. Thank you.